Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, national insurance columnist and host of the Business Insurance Zone, and today, your EduTrainment coach. We're talking about the Introduction to Life Insurance series. We're going to be doing this for the next, 3 months because we have so many people coming into our practice right now. And because of that, I want to be able to show you some ideas and concepts so that you can get an introductory level, get the language down. And that's what we're doing. And of course, we're brought to you by Lincoln Benefit Life, an Allstate company. And one of the reasons why we chose Lincoln Benefit Life is because their software, we voted it as the most user-friendly software on the market. And we want you to be able to go out to that site, www.lblsales.com/ETW, and go ahead and download the software, because in the weeks to come, we want you to play with us on the same basis so that you can see what I'm doing on the software, and then you can go ahead and mimic what we're doing, so you can not only learn the concepts of insurance, but you can actually see what we're doing on the proposal system and have it on your computers so that we can go for page. And that's going to be very important, especially when we get into a little more technical issues later on in our time. But today, we're going to be we've talked the last couple days. We did our history first day. We talked about indemnification. That's one of the reasons we use insurance. We talked about income yesterday. Today, we're going to talk about inheritance. Now, inheritance, life insurance with inheritance is a huge market. And I want you to be able to start thinking about this. Life insurance with an I, indemnification was our Tuesday show, income I was our Wednesday show. Today, we're talking about inheritance. Inheritance is going to cover issues like charities, charitable giving. It's also going to cover issues of establishing a legacy. And one of the big ones, it helps me pay transfer taxes, which could be estate taxes, state taxes, ordinary income taxes in the last year of death. All those areas, it's able to actually help us. And one of the reasons why it works so good in inheritance is because it's leveraged. For example, a male and a female, both 65, non-smoker and in good health preferred, could get $1 million worth of coverage. And think about this. The leverage of a 65-year-old for $1 million of coverage could be, let's say, 10 grand to keep it in our head easy, $10,000 a year for $1 million worth of coverage, and that's a guaranteed annual premium. So you can see the leverage or the discounted dollars are huge. Why should I pay my $1 million tax bill? Why should I pay my $1 million tax bill out of $1 million when I can leverage it? And maybe over my life, I might only be in it by the time I make all my premium payments. Maybe it's $250, which means that my $1 million was a 4-to-1 ratio. I love that because I'd rather pay taxes with a reduced amount rather than taking it out of my pocket. That's what life insurance does. It's the leverage of life insurance. So I want to be able to use these discounted dollars because I'm actually paying less out of my pocket, but I'm still paying my tax bill. That's very important. Now, when I think about taxes, remember, this inheritance, when I use life insurance as an inheritance issue, I don't want my beneficiaries or the people that are going to inherit my assets or the transfer into business, I don't want them to pay any more taxes than they have to. Or if they have to pay taxes, I want them to do it in a leveraged way. So the first thing I look at taxes is for personal use, for inheritance, but I might do beyond estate planning because a lot of our estate planning has to do with small businesses that are inside the actual person's personal overall assets. Because of that, I'm using taxes. And the next thing I want to look at when I'm done with paying taxes is charitable giving. Interestingly enough, charitable giving is becoming a huge issue, especially for people who have been in our business. They're actually building out their practices now using charitable giving. Now, that means as long as the IRS has approved the charity and they're legit, you could go ahead and gift to charities people that you think you want to see them move on into perpetuity. You want to see this organization live on. You like what they're doing, you're part of what they're doing, and you want them to continue. Well, sometimes when you're going ahead and looking at the leverage of life insurance, especially with two people on one contract called survivorship or second to die, we'll get into that as the weeks to come. That leverage of 4-to-1, 5-to-1 is a huge idea because you can donate to the charity of your choice. Think of this, even if you didn't have a lot of money, I use this term, what if you had big heart, but you had a small wallet? If you had a big heart, but you really didn't have the money, you could do something really cool that would be easy to do. For example, that same male and female, 65, second to die, two people on one contract. When you think about it, they may be able to, for maybe $3,000 on an annual premium, they may be able to give $100,000 to their charity. They really don't have a lot of money, but because of the leverage of life insurance, because of its discounted dollars, its ability to really give you bang for the buck from an economic point of view, $100,000, $3,000 to $3,000 for $100,000 of coverage, that's a pretty good deal, and they can contribute to their church, their charity of their choice, whatever it is, as long as it's an IRS approved, nonprofit organization. And that's why I like this, because it really works even for people who don't have a lot of money, but their heart's right. They want to be able to do this. Speaking about the heart's right, when you're thinking about a legacy, sometimes we're spending down our money and we want to give our children, our grandchildren, our charity, we want to give them a legacy, maybe give them a leg up, to give them an advantage in life when we're gone. Again, the leverage. Think about the leverage that you could do. With a male, 65, and a female, 65, or second to die, the one we've been using as our example. If I was going to look at a legacy of handing $1 million to my family, and remember, it has a lot to do, can I justify the $1 million worth of coverage? So you always want to make sure, do I have economics? Do I have the math on my side? When I go to the insurance carrier, can I prove that, yes, I have justified $1 million worth of coverage? If I covered this on a male, I may only get $400,000, a 4-to-1 ratio. On my female, I might get $500,000, a 5-to-1. But on second to die, and assuming everybody's non-smoker and preferred, I might actually get $600,000 or 6-to-1 leverage or ratio. When I'm looking at handing a legacy, I can actually, with little money down, depending again on my health and the justification issues, I can actually leverage, whether it's one person male or the female or a couple, I can actually leverage and create a legacy. Maybe I don't really have $1 million to give around, but if I can justify it from an insurance point of view, I can go ahead and say, oh, I'm going to now what? Hand this to the next generation, hand this to the charity of choice, or skip a generation and hand this money to my grandchildren. These are all the tactical uses that I can use in legacy. So when I'm thinking of inheritance, back to our big boilerplate that we were using, and I'm looking at inheritance, using life insurance for that, I want to be able to look at legacy, charitable giving, and remember, there's a few other ones, but I'm doing the big ones. That's why we're doing your introduction. And I want to be able to pay taxes due. Those are our three basic premises. We can use one life. We can use two lives. We have to look at the economics and see what's appropriate when we're talking about inheritance. So when you're thinking about approaching clients, do they have a heart for legacy? They want to give something to their family or a charity, or they want to really pay their taxes, but they want to do it in a discounted way and not really have to pay it out of cash flow or pull or surrender anything from their non-qualified monies or their qualified accounts. They want to be able to pay their taxes with the best economical way, and the leverage of life insurance. Again, this phrase, leverage, this phrase, discounted dollars, those I want to see, does the leverage or the discounted dollars of life insurance, does it make economic sense to fund a legacy, a charity, or taxes due. And again, I'm going to be looking at all my beneficiaries, which could be skipping a generation as well. So when I'm looking at inheritance, I'm looking at for all the possibilities of what I want to do when I die. Who's going to get my assets? How am I going to pay taxes? What charity am I going to be able to bless? Am I going to try to build a legacy for my bloodline, my family? I want to look at all those ideas. And one of the things about inheritance that I have to look at is who should be the owner. And we're going to get into this a little bit more tomorrow. Well, I guess I should spell it right. I'm looking at ownership. I'm looking at insured. Who's the insured? And I'm looking at who's going to be the beneficiary. These are three important things that you need to understand. The biggest one from a tax point of view is whoever owns the policy. If there's a taxable event, that person is going to be obligated to pay whatever taxes are. The insured is where the policy is based on. So in my situation, I might be indemnifying my family. I'm the insured. But if my estate is large enough, I might not want that money to come into my estate because I might actually subject my life insurance, which is generally tax-free. It might be subject, because of certain rules, it may be subject to taxes. So my ownership issue is, should I own it in some form of a trust, or should I own it myself, or should I cross-own it with my spouse? Should I let my kids own it? What happens when my kids marry somebody else? What happens if my in-laws become outlaws? All right, what if they divorce? I have to figure out, do I want to be able to let them own it with the possibility that their mates may go south on the relationship? So I'm always looking at, what do I want to do here from an ownership point of view? On the insured, I want to say, who is the person that I want to indemnify in my case? If I'm doing something for legacy, it's going to be myself and my wife, because I like legacy planning, charitable giving. So I'm taking two lives and I'm merging them into one, using second to die, or this phrase they use is survivorship. I'm looking at that idea. Now, beneficiaries, I could have one beneficiary, I could have several beneficiaries. I just need to know what's the percentage that I'm going to hand. And I have two forms of beneficiaries. One's called the lead beneficiary. The second one's contingent beneficiary. So let's say my wife, which is true, my wife is the beneficiary of my policy. But if something happened to her and I at the same time, our children become the secondary or contingent. Our grandchildren are our third contingency. So we're always trying to say, who are all our beneficiaries? And do we have to be equal distribution? No. You can be as specific as you want. My son's going to get half of it. My two daughters are going to split the other two. Or I could give it to them equally, a third, or a third. So remember, you can do pretty much how you want to dictate who are your beneficiaries, as long as there's justification to it, and as well as you can give them percentages. So when we're thinking about inheritance from a life insurance point of view, it can do a lot. Taxes, creating a legacy for your family. And of course, as I've said before, I'm always looking at ways to give charitable giving, and the power of the leverage, the power of discounted dollars is the real main theme of using life insurance and inheritance.
This has been an EduTrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.